Back to our guests right here in terms of putting their money to work, Michael Yoshikami and Yu-Dee Chang. Gentlemen, sorry about that interruption. You know, Michael, I'm looking at a graphic here, of a chart of the leading names for the second quarter. It's mostly technology. Akamai Technology was the best performer in the second quarter, up 44%. SanDisk up 35%. Metro PCS up 25%. Salesforce.com up 25%. And metals names also doing well. Pioneer Natural Resources, Titanium Metals. Would you put money to work in tech right here?
I would put money to work in tech. I think we're in an economy right now where companies need to get more efficient. I also think you're seeing a product replacement cycle. I think Oracle's numbers actually suggest that there are reorders that are actually occurring after a real significant downturn for a period of time. So I think technology is the kind of area that even though the economy is going to slow down, companies simply have to be more efficient, especially, Maria, if we're going to have 10% unemployment, you have to do something to replace those people. Maybe it's voice recognition systems when you're calling in for customer service. So I think technology is a place to go when the market is soft. I think it's going to be a growth engine going forward.
Well, Yu-Dee Chang, let me ask you the same question. I want to also tell you about the laggards in the second quarter, because it's really a lot of oil companies. Anadarko Corporation down 45%, Massey Energy down 40%, Office Depot and AK Steel also among the losers, and Dean Foods, King Pharmaceuticals down 35% on average, all of those. Oil, obviously a major issue with the BP spill. Would you put new capital to work in the oil sector or technology right here?
Well, I might. I think the name of the game these days is sector rotation, especially in this so-called directionalist and abrupt and choppy type of market. So you want to buy dips and sell rallies and rotate into different sectors. Technology, I agree with your guest that it is a sector to look at. Energy sector actually would be a sector I personally would be looking at, especially another sector that I would look at is the metals and the base metals, especially relating to the growth of China. So, however, what I put money in right this second, in addition to being sector rotation, you're actually seeing also issue rotation, like you were saying a little bit earlier. RIM, Motorola, and Apple are basically competing with each other. So I would buy dips, sell rallies. I would put the money in, but I would look for the right opportunity to do so.
Buy dips, sell rallies. Do you think, though, that this market, with the new nervousness that we're hearing about as it relates to second quarter, as it relates to the possibility of things worsening economically in the second half, do you have any credence to those arguments?
Yeah, I think there is. You know, basically, you're bringing back the possibility of a double dip. Personally, if you think about it, that's what drives the market, right? Constantly fear and greed. Right now, we're going through a fear stage again. But if you really look at it, the market itself, on an overall basis, really hadn't gone anywhere since November of last year. We gone up, we came down. So basically, I think still the theme is, yeah, you could buy, but better buy dips. And also another strategy that we like is actually, believe it or not, writing options and bracketing the overall market, saying over the short term, it's just not going to make a sustainable movement toward the upside or downside.
All right, gentlemen, great conversation. We appreciate it. Thanks very much, Michael Yoshikami, Yu-Dee Chang. Thanks for joining us. Up next.